Welcome to the 𝗦𝗵𝗶 show, and happy Friday, happy Good Friday to everyone. Thank you for tuning in. Thank you for joining us. Thank you for taking out, first of all, your valuable time to being here with us each and every morning. And that means a lot to Ria and I. So we want to acknowledge you, first of all, for taking your time out to being here with us. And as always, we always want to share knowledge with you, impart our knowledge to you so that you lead a successful business and successful life. So my name is Alka and welcome.
My name is Ria and welcome to our show.
So Ria, without further ado, I'm going to pass the mic on to you.
Thank you, Alka. And today's book is a continuation of Increasing Our Financial IQ by Robert Kiyosaki. So let me do my screen share here. And there are 15 points that I want to share with you on today's topic of making more money. So let's begin. This is financial IQ number 1, which is making more money. The first point that I'm going to share with you today is called personal financial statement. And a lot of times when I learned about finance, I didn't know about personal financial statement until the age of 32. So just very recently did I learn to know about personal financial statement. And I was a doctor at that time working for a big employer. So personal financial statement is this. So you have income, you have expense, and this is the letter A, assets. And this is the letter L, which is liability. That's the personal financial statement: income, expense, assets, and liability. Now, the cash flow quadrant has these 4 sides. The left side and the right side, it has an upper and a lower. And E stands for employee. S stands for self-employed. S stands for specialist. And S stands for small business. So I'm on the S side. I'm a small business and self-employed. Now, all of us, our goal is to get to the right side of the quadrant. And the right side of the quadrant is where the B and the I lives. The B is big business. Big business have more than 500 employees. I stands for investors. So that's the cash flow quadrant. The E, which is employee, S, which is the self-employed, B, the big business, and the I, the investor. That's point number 1. Point number 2 is, let's compare the employee and the self-employed, the specialist, and the small business to the B, the big business, and the I, the income. The investors. So this our box, just like earlier. This is your income, expense, assets and liabilities. So I'm going to label them. This is income, expense, and this is very basic. And I'm taking my time to explain this to all of us so it sticks in our mind. And when it sticks in our mind, we understand it, not just today, but we understand it for the rest of our life. Now, asset and liability. So the E and the S, employee and self-employed, business and investors, big business and investors. And so what they do is the E and the S have a job. And so their money flows from their job, they get an income, and they have an expense. So the money that goes in from their income, whatever is left after taxes, they use that for their daily living and for their other bills. And that goes out to the expense. Now on the big business and the I, the investors, their income is coming from the assets. So their assets provide them the income. Now on the E and the S, remember the income is coming from the job. And then the money is used to pay for the expenses. Third point, work. This is very important. The E, employee, S, self-employed, specialist, small business, versus the big business and the investors. So the E and the S work for this. And I have my small triangles, my big triangles on the B and the I, which is the big business and the investors. And I have a straight line going up. So now the E and the S, employee, self-employed, specialist, the small business, they work for money. They want a steady paycheck, and they also earn commission as well. The big business and the investor, they work for assets. They work for cash flow, and they work for capital appreciation. That's the third difference. Fourth point. One of the hardest thing that to get across the E, employee, S, self-employed, specialist, and small business is so one of the hardest things to get across the E, the employee or the S, is that they do not work for money. So the big business and the investors, they do not work for money. Instead, Instead, the big business and the investors, they work for free. They work for free. Believe it or not, they work for free. That's the fourth. Fifth is the focus. The E and the S and the B and the I. The E and the S focus on income. The B and the I focus on assets. The sixth point is one of the hardest thing to get across. The E and the S is that the B and the I this is a quicksand, and the quicksand represents life. So one of the hardest thing to get across to the E, the employee, the S, the self-employed, the small business, the specialist, is that the big business and the investor, they work for free, and they work for free for many, many, many life years. Many, many life years. That's the sixth point. The seventh point is, that's the E and the employee. The employee and the self-employed, the specialist, the small business, they got to work to be paid. Eighth point, the employee, the specialist, the self-employed, the small business, they also have a very big heart. So they contribute their time to work and volunteer for free to charities. And they also work for pro bono, for worthy causes. Now, but we have to remember the E, employee, specialist, self-employed, small business. In order for them to get earned income, is they have to work. Ninth point, the E and the S and the B and the I. And this is all about income. So this is my quicksand. And this is a file of folders. This is the life of an employee or an self-employed, and the sand is slowly going down in the bottom. So the difference between the S, the E and the S versus the B and the I of income is that the income of the E employee as self-employed specialist, small business versus the big business and the investors, the income of the E and the S is earned. Whereas the income of the B and the I is passive or portfolio. 10th point. This is the sand, quicksand again. That's the sand, small sands going down into the bottom of the bottle. So we have a few life left. And this is me with my bag. I'm working for my bag. So every time I trade my time, I get money. That's earned income. Now, I'm going to draw triangles with several sides. And there's a bridge in between these triangles. And this triangle is surrounded by a circle, a black circle. And then there's another circle on the other side. And I have this longitudinal object here, and I call it a bridge, just like the London Bridge. Now, around this, I call this my castle, and that's my earned income. That's my earned income. Around this castle is a body of water. And so the moat of this castle is this bridge and the sharks. Without the drawbridge, one cannot get across. Because why? There's sharks in here. So if you try to swim, they're going to eat you. These big sharks protecting the castle. That's the moat of the castle. Now, earned income. And this is the 10th point. Earned income is the hardest. It's the hardest income to protect from financial predators. So earned income is the hardest income to protect from financial predators. So this is our sandbox again. And that's our life. We have few life left because we've been working so hard in our job. Yep. And I'm going to draw my head, my nose, and my mouth, and my eyes here with my brain. This is my brain. Move it a little bit so people can read it. So earned income is the hardest income to protect from financial predators. Therefore, earned income is not the smartest thing to do. That's point number 10. Point 11. When it comes to self-employed, So I have several of this transportation. And I draw this because it reminds me of a bus. For me, the bus stands for a business. That's just how I remember things. Bus, business. So the book mentioned that self-employed are not businesses. What they are, still drawing my bus, steering wheel. My head is right there holding the steering wheel. Self-employed is not a business, but they are self-employed, has a job. So that's 11th point. The 12th point. So I'm drawing myself. I'm drawing my sandbox again with a few sands remaining because I've used up majority of my life sand and now they're in the bottom, so I have a few left. So why is that? Why self-employed have a job? Because self-employed, if they stop working, which is this earned income here, then their paycheck stops. Let me repeat. If the employee, self-employed, stops working, then their money, their paycheck stops coming in. So there's no more income. 14th point. This is my sandbox again with my life. Few sands remaining up on top because majority of it I've used down in the bottom here working. And I have triangles here, a lot of triangles with 4 sides. And I call them assets. So by definition, a job where we trade our life, we trade our time for money, a job is not an asset. Let me repeat, a job is not an asset. And that's point number 13.
14.
Oh, it's 13. 12, 13. I counted wrong. My math is wrong. Point number 14. Let me bring back the triangles. And I have a lot of triangles here with 4 sides. And I'm drawing my face, my neck, my arms, my legs, my shoes, and I have a pocket. And I have this big bag of money. And these are called assets. These triangles here are called, with 4 sides, are called assets. They're buildings. They're, for example, the apartments. So what assets do by definition is they put money into your pocket. Assets put money into your pocket. Point number 15. This assets here is triangular stuff. This is my life. My sand left in my life is view. And this is my head. This is my feet, my arms, and I'm bringing a bag, which indicates work. So this means the assets, even if you stop working, if you do not go to work, your assets provide you money. They provide you money, even if you do not work. So to recap, making more money. Financial IQ number one, making more money. Financial IQ number one, making more money. First point, personal financial statement has income, expense, assets, and liability. Cash flow quadrant has E, which stands for employee, S, which stands for self-employed, specialist, small businesses. B stands for big business, more than 500 employees. I stands for investors. Point number two, when it comes to income, the employee, small business, specialist, the self-employed, their money comes from the job and it goes to their income. The taxes are being paid here, so whatever is left gets paid to the expenses. Your mortgage, your food, your enjoyment. Whereas the big business and the investors, their income is coming from the asset. Assets provide the income to the big business and the investors. When it comes to work, the E, employee, S, self-employed, specialist, small business versus the big business or the investors. The E and the S, they work for money. They need a steady paycheck. And people, some of the people work for commission, whereas the big business and the investors, they work for letter C, cash flow and capital appreciation. That's what the big business and the investors work for. Cash flow, capital appreciation. Point number four, one of the hardest thing to get across to the employee, the self-employed, the specialist, and the small business is that the big business and the investor, they do not work for money. In fact, they work for free. The big business and the investors, they work for free. Fifth point, the E, employee, S, self-employed, specialist, small business, their focus is on income. Whereas the big business and the investors, their focus is on assets. Point number six, one of the hardest thing to get across the E, employee, self-employed, specialist, small business is that the big investors and the I in big business and the investors, they work for free for many years. They work for free for many years. Point number seven, whereas the E, the employee, S, specialist, small business, self-employed, they work to be paid. Point number 8 from the book. The employee, the self-employed specialist, they are also generous. They give their time to do volunteer to charities. They also do pro bono worthy causes. Now, primarily, the E and the S, employee, self-employed, specialist, small business, their money is coming from their work, their job. They're earning their money. It is called earned income. Point number 9, the income of the E, employee, S, specialist versus the big business and the investors. The income of the E and the S is earned, whereas the big business, their income is passive and it's coming from portfolio. Passive means they are not trading their time for money. They're sleeping and earning money. Point number 10. This is the sandbox. This is called our life. A lot of us, we have a little bit of sand left in here. Why? Because majority, we've already given, it's already down in the bottom. We're working, trading our time for money. According to the book, earned income is the hardest income. This is our castle. It is the hardest income to protect from financial predators, from the sharks. This is our castle, our income. And earned income is the hardest income to protect from financial predators. Therefore, earned income is not the smartest thing to do. Point number 11, self-employed. They are not a business. Why? Because they have to work. It's called job. Point number 12. The E and the S, employee, self-employed, specialist, small business, if they stop working, then the income stops. There is no more income coming in. Point number 13. The job, therefore, is not an asset. Why? Because if you stop working, then the income stops coming in. Point number 14, by definition, assets, they put money into your pocket. And assets, it continues to provide you money even if you do not work. So those are the 15 points of making more money. So I hope you learned something from today's topic. So stay tuned for more of Alka and Ria show.
Ria, thank you so much for sharing. Thank you. Friends, I hope you got a ton of nuggets just from those illustrations, those 15 points to get out from the employee mindset to the small business or the specialist or the self-employed, to going and transitioning into the business or the investor mindset. So I hope you got a ton of information. I know I was making notes. So Ria, I do have a couple of comments I just wanted to make. You know, absolutely. You know, when it comes to income and versus expense, those beautiful illustrations that you just pointed out, you know, it is very important that we, you know, understand, absolutely, because even it doesn't matter how old you get. I mean, even you can, you know, you could be in your 30s, 40s, 50s, but not understanding the basics when it comes to income and expense. What are your thoughts on that? Because that is relevant.
Yes, that is very relevant. Now we have to consider, where are we in the quadrant? Because we do have income, all of us, whether you're the E, the S, the B, and the I, we all have income and we do have expense. Now, if you remember, the E and the S, their income is coming from the job, whereas the B and the I, their income is coming from their assets. And that is why the earned income is not the smartest thing to do, according to the book, because if we stop working, if we stop trading our time for money, money stops coming into our pocket. Whereas the B and the I, they can sleep forever and money is coming into their pocket every single day. And that is why they're providing what? Legacy. Legacy that does not stop for future generations and future generations. So that is why we've got to be in the B and the I, big business and the investors.
Absolutely, 100%. You know, switching our thought process and knowing as to, okay, where is our direction? Where is the life? As we, explained in the sandbox, over time is ticking away, and none of us, no one on this planet has time. And if we know that our goals and our desires are to build the legacy, building wealth and wealth creation, we have to change our mindset in order to fulfill the life that we want. So Ria, one final question. When it comes to passive income, could you share some examples with our viewers? What are examples of passive income?
I love passive income.
Me too.
Because you know why? Passive, you're not doing any hard work. Active means you're trading your time for money. Contrast that with passive. Passive is cruise control. If you're in the car, passive means you could be sleeping and money is coming into your pocket. Now, let's say, so passive income for my kids, I tell them every day, look, you're sleeping and your books are earning money for you, even if they're 75 cents each. George earns 75 cents for every book he sells. 75 cents for Jaden. And you may ask, Ria, why 75 cents? Why? Because I have to pay tax. I have to pay a commission to Amazon for putting our book out there. Right? I have to be paid too. So all three of us have to be split 75 cents, 75 cents, 75 cents. Their book, Asset Kids, how kids can help their mom and dad. Their book is $9.99 on Amazon, but we have to pay Amazon. So what's left of us is 75 cents each. And that is also true if you're an employee. A lot of our money from being employed goes to our taxes before we can spend it on our lives. So passive income is the way to go. So that's for the kids. For me, what do I do for passive income? I work hard for assets. Why? Because these assets will provide me money even if I'm not working, if I'm not doing my job in finding apartments. Why? Because currently we have 70 apartment units plus our 135 apartments together with Alka, together with my friends, family, co-workers. We have this 135 apartment units in Florida. So if we stop working, those money coming from the apartments are providing us money. So that is passive income for adults and for kids.
Absolutely. Thank you, Ria. Thank you. And you know what? So friends, today being Good Friday, we are coming to the weekend, but we are hoping that from today's conversation led by Ria, you are going to start to think about transitioning to the B and the I, the business and the investor, thinking into how you can create passive income. So even if you're asleep, you have money, you wake up in the morning the next day, you have money in your bank account. Isn't that the most beautiful thing? It is, and Ria and I think that is amazing, waking up in the morning and you see money in your bank account. So friends, that is what we want from you, for you, is to, developing that investor and business mindset, not sticking into the employee or the self-employed or specialist or small business. Because as Ria said, if you stop working, where is money coming from? And how are you going to support your family, yourself, and if you're building a legacy, how is that going to be possible? So friends, we want to, always implore knowledge. And Ria, thank you for sharing that, because that is so relevant. And so today, being Good Friday, I hope, you are going to think about transitioning to that side of the quadrant, investor and the business, because those are the only two options that we have if we are wanting to create the legacy, wanting to create the wealth creation. So Friends, we have come to the end of the show, but thank you so much for always tuning in. Thank you so much for always giving us your valuable time. We truly appreciate it. Rhea and I appreciate you tuning in each and every morning, because we know, time is valuable and we all have time and we're all working. But thank you for taking out your time, and happy Good Friday and having an amazing Easter weekend. We will see you same time, same place, Monday morning.